and Nike rocks, and our technology nails all three. Hello, fellow traders everywhere. Adam Hewison here, co-founder of MarketClub, with your midday market update for Wednesday, the 21st of December. Oracle's, Jeffries, Nike. We'll examine all three stocks today and show you step by step how they played out with our trade triangle technology. Gold needs more time. We'll also take a closer look at the gold market today and find out why it has been a major disappointment for most investors just recently. Europe. Who can figure out this enigma? All I know is it's not going to be good. Three stocks having big moves today. We will let our trade triangle technology analyze these three stocks and make the call. Now, let's go to the one truth we count on every day here at Market Club, and that is our trade triangle technology. So here we are at our home page, and we'll go right to our portfolio, which is real easy to do. The portfolio manager is right here. I'll just click on that, and here we are. So I'm going to move this a little bit further back. And there we have it. So before we go there, you may want to take a look. One thing we'll be talking about is our conference that we have, our Investors Summit, which takes place on the 24th and 27th of January in Salt Lake City. You can call us toll-free, 1-877-219-1482. We have details on our blog, or you can call us at this number, extension 10234. Love to have you there. I'm going to be there talking about the markets as always, and we'll have some other experts who will help you improve your trading in 2012. So see if you can make it. We'd love to see you. So let's go back to our markets, and the first one we're looking at is the S&P 500. This market had a huge move yesterday, and I want to show you something very interesting in this market that you may not have noticed. I've already got this drawn in, but I can draw it again. So let's just take our Fibonacci numbers out, and let's get closer in so we get a real close look at this. What we did, take our Fibonacci tool right here, make sure the yellow box is on the far left-hand side, click on the very high, which is right here, drag it down to the lows we saw on Friday, and look at where this market stopped yesterday, right around the high of the Fibonacci retracement, the 61.8% retracement. And if we look at this, oops, let me just take that off. If we look at this right now, we can see that yesterday's high was 1242.82. Hit it on the numbers. So yesterday, I think, was somewhat of a fluke. The market was very heavily short based on the close on Friday, when there was no follow-through and the music from Europe was sweeter than it's been lately. Market short covering, boom, in thin markets. This is the silly season. You have to be very careful about what you're trading. But the one thing I do know is you have our trade triangles, longer term are negative. We're in a 60 mode trading range, and you're below the parabolics, the PSAR parabolic. And it would seem to me we're going to just go chop back and forth here and possibly test the 1220 area, which wouldn't surprise me. But it's going to take a while for this market. It's going to roll over. It's not just going to happen in one day. Normally, what you see if you have a big up day like we saw here is that it's going to take a few days just to dull that out. And you can see where the parabolic comes in around the 1260 area. I don't think we're going to see the market get there unless there's some spectacular news out of Europe, which I don't think will happen before the holidays. I think we're going to look into 2012 for that. So let's go to our next market. Next market's been silver. This has been a major disappointment for lots of investors this year as it continues just to erode down. The action today so far, we traded as high as 30.18 on the upside. We're currently trading at 29.33, so we're down almost $1 from the highs earlier. And this market doesn't act well, in my opinion. I think it's just going to continue to erode. Even though you're oversold, it still looks bad to me. The chart formation, you've got the MACD is under the blue lines, under the red line, indicating the trend is still down. Our indicators, the monthly and the weekly, are still red, indicating the trend is down. And you can see from 33.15, we've never wavered. It's always been, if you're watching these show every day, we don't change every 2 seconds with the current wind du jour. We actually basically trade on a very scientific, very mechanical, and very disciplined approach. And the disciplined approach says the trend is right now down in silver. It will eventually change, but it could change from much lower levels. Now let's go to gold. We talked about this on the intro. Does gold need more time? I think it does. Here's a plus 55, indicating a trading range, which means you should be neutral. We traded as high today in gold in the spot market of 1641. We're currently trading at 1614, so we've come down $26, $27 in just the course of the day, which doesn't seem to faze anybody anymore. But this type of formation, we talked about it yesterday, is not a bullish formation. It's sort of like it's a little flag formation, and generally speaking, I'd expect to see some sort of pullback and test of the 1575 level, even the 1550 level. And then I think you have the nucleus of a base building project that can push this market higher later on, as we are looking for new highs in gold sometime in 2012. We'll see how that plays out. But generally speaking, you've got a mixed bag, plus 55. Longer term, we're still bullish from 1430. We have never changed that. You can see we've talked about that. In fact, if we take this market out, you can take a look, and we'll just put our monthlies in. You can see this is the last buy we had, 1430. That was back on March 1st of 2011. It's never changed. And the market, yes, I understand the market's down considerably from the highs, but if you're a long-term trader, that's what you have to take. If you're trading with our intermediate term, or you're trading our monthlies against our weeklies, then you'd be in and out of the market. Right now, you'd be out of this market on the sidelines. So let's go to our next market. Next market's copper. Copper is just reflecting the economic conditions. We plus 50. It could not be more neutral if we planned it. And you can see we rallied up to the midpoint of the Donchian trade channel with a plus 50 reading. It means it's a trading range. So it means probably that this high we saw today around the 343.70 level is going to be the high for a while. And I could see this market just drifting sideways for a while. It's going to reflect economic conditions, and that means the S&P 500. And if the S&P 500 is down, chances are this is going to be down, and the S&P 500 is up, chances are this is going to be higher. So my guess is we're going to see this market dawdle along for the rest of the year. I don't think anyone's going to take any big positions in this market. Volume is drying up, as are the traders are getting ready for their, like you and I or anybody else, preparing for the holiday season. And whatever religion you are, happy Hanukkah, Merry Christmas, and all the best in 2012. So let's go to our next market. And the next market we're looking at is going to be crude oil. Crude oil actually put in a good performance today. However, it looks as though we're very close to being at a cyclic high period. The parabolic comes in today right around the 10. Let me just get this right so I have this. The parabolic comes in around 100. I think that's going to be a very major sticking point for this market. I would not be surprised to see this market under pressure tomorrow. But I think generally speaking, you're at 55. It's a trading range. You've got thin markets. You've hit the bottom of the obviously the Donchian trade channel. You've popped back up over the midpoint, and you've alleviated a very oversold condition. However, your MACD is still negative, as is the intermediate term trade triangle. Longer term, we are positive on this market. So let's see how this plays out. But generally speaking, keep your powder dry in these markets for at least until we get into the new year, I think. So let's go to our next market. This is copper. We talked about copper, crude oil. Let's look at the dollar index. The dollar index put in a good performance, is a down trading around the 79.20 level. It rallied pretty nicely. Again, it's still in a bullish mode, plus 75, sort of emerging trend, but it's been higher than that earlier today. If it closes over 80 or closes over yesterday's high, which is 79.88, I think we're in a good shape in this market. So generally speaking, the trend is your friend, and the trend continues up, in my opinion, to be positive for this index. Looking at the euro, which is another market, and that is, I think, the action today, we rallied almost as high as 132, came right back down based on the realization that the ECB and some of the stuff that's coming out there. It's crazy. But generally speaking, this market looks like it wants to go lower, in our opinion. We've got our two main trade triangles, the monthly and the weekly negative. And if we scope this out further, you can see that this market is still, this 132 level is really where the previous support was. Remember, we talked about that. When it broke through, we thought that would be really an important element. Well, we've come back, we've rallied up. So old support in this case, and let me just put my telestrator on, equals new resistance. So if we look at where we came here, just kind of draw this across here. we sort of stopped there today. So this was support, as we talked earlier, and so that was support. And once we broke through that level, which we did quite convincingly on the downside, it now becomes what we call resistance. Plus you have the PSAR, it's at the 132.15 level, so that's an area to place stops if you're a very conservative trader. So let's see how that plays out. But generally speaking, you've got our monthly and weekly down. Only the daily is up, and I think that's probably going to turn down in the next few days towards the end of the week. Remember, this is a shortened week because of the holidays, and I think you should really be very, very close with your money. There's no reason to try to make your money the last 2 days or 3 days of the year. So if you haven't made it earlier, you haven't been following the trade triangles. So let's go to our next market. I'm going to go back to my portfolio, and we're going to be looking at the Reuters Jeffries CRB Commodity Index, which we look at every time. Now this is obviously up because of oil and the rally we've seen in oil, but generally speaking, this market still looks as though this area, this 295, 293 area, is incredibly important for this market to continue to hold here, because if it doesn't, it changes our whole outlook for this market, because this was a major Fibonacci retracement level. The fact we've tested it again potentially could be, and it's still too early to tell this, but potentially this could be a double bottom. So I think that's what we have to look at, and that's the case, and this will be a pivot point. And if that's the case, we could push and project this market up to probably about the 350 area, which takes it back to these areas right here and right here. So I think that's potentially, but it's still too early to say that's the trade. Let's just give this market some time to work out. Let's see what our trade triangles do, and I think there'll be plenty of time to get in this market should that be the trade. So let's take everything off the screen, and we're going to be looking at some of the markets we talked about earlier, and that is going to be the Oracle, which was a big miss in earnings today. It's down dramatically. You can see this is where it closed yesterday, but this is where it opened today, and we're down 13.56%, which must make Larry Ellison very, very sad or angry or whatever you want to call it. But the lows were seen back here, and this was in the period we talked about before. This is on the, let's see, August 17th, around that level, around the 20, let's see, we got 24.72, somewhere like that, 24.76. So we still have some, there should be some support coming into this market. But what I want to share with you is that our trade triangles were actually negative before this report came out. So the point I'm making is, even though it shocked the market, you can see this 13% drop, that's a huge move in a stock this price, 13%, but it did not shock our trade triangle. So let me scope this out just a little bit more, and you can see right now where our trade triangles came in here at 30.65 on July 27th. So we were at July 27th, we're saying there's some problems with Oracle, and at that point in time, it was not evident to everybody else. Now, you say, okay, you said that then, but look what happened, the market rallied. Well, that's why we use our weekly trade triangles for timing. So if you put this in, the weekly, you can see that we were basically short from 30.65. We would have covered this position at 28.05. We would have got short again right here at 31.30, and look at where the market's trading. So here you are looking at this market for the last, since July. You would have done extremely well following our trade triangles. No surprises. This is why I'm saying sometimes you don't have to listen to the news. You don't have to watch CNBC. You don't have to watch Fox Business News. You can just listen to the triangles, watch how they work. And this is not just a random sample I'm showing you. Oracle is a huge stock. And if we look at our next market, let me just take everything off the screen. And we'll look at the Jeffries Group. And the Jeffries Group had a big move up yesterday. They're down today, and it's a 60. So what does that mean? It's a trading range, and that's exactly what we're saying. The trend is down, but we basically got out at 12.40. This is on the 5th of December. This is 16 days ago. We were given a signal just to exit the position, and take profits and stand aside. And that's the key thing with the trade triangles. You're not going to get caught on the wrong side of the market very, very often. It's going to be very rare that that happens. But let's go back to our next market, and that's Nike. And Nike actually had good earnings, but we're looking at our trade triangles are all long from the right direction. 94.23 is our level to be long this market on our monthly trade triangles. And if we take everything off and just go to look at our monthly trade triangles, you can see there they are, and that came in on September 2nd. October 21st. I beg your pardon. October 21st. And that's another positive. So look at these monthly trade triangles on the stocks because it's very important. This potentially could be a energy field we're building in this stock, Nike. Just do it. I have a big sign in my office that says just do it. And if you look at this market, let me just draw that in for you very quickly. If we're looking at this on Nike, potentially this is what we could be seeing for 2012. This is what we consider to be an energy field. And over this level right here, I think that's 98. You could be looking at a fast move up to the 106 level. That's what we're looking for if we go over and close over 98. Looks very good to me. So Nike trend, very strong to the upside. That's what we're looking for. So let's go to our next market, and that's going to be a stock called Sentus, and that is also had a big move today. But again, our trade triangles caught these markets. You can see if we just put in our weekly ones, you can see we got out of the short position we were in. The trend changed today at 32.48. It's 33.72 right now in trading, but it looks to me like this market can go higher. You've got a nice base. The trend, it reversed today. You're seeing the signal exactly as it happened today, not tomorrow, none of that, but this happened today. So very good signal. All of our trade triangles are 100% green, meaning a strong trend is in place. So watch that very carefully. Next is Teradata. You can tell right away it's minus 90, trend not good. So looks Teradata, you're looking at this market and you're looking at the monthlies and the weeklies. Now let's take this one by one and we'll just let's scope this out just a little bit further. And you can see the monthly kicked in right here at 51.43. And the market's currently trading at 46.70. And if we put the weeklies in, you can see from 51.43 would have covered that at 52.88, small loss, but you would have got short again at 54.56 at a higher level, I might add, which is than the original signal. And that's why timing is so important, using the weekly charts and the monthly charts in conjunction, and the weekly to filter your trade. They're currently trading at 46.97, so it's a nice profit, an $8 profit in there. And that's how we use our trade triangle. So I've just taken the three stocks that had the biggest moves today and shown you how the trade triangles work. I couldn't have picked better examples. They're just random examples based on what the market was doing. So that's what we do with our trade triangles. This is a perfect way for you to use them in 2012. And also we have our show tonight. Hopefully you can watch the show. It's on 5 p.m. We do a 1-hour show. We would recommend giving us a call. And you can do that quite easily by calling our number, 1-800-538-7424, extension 129 rather, and just leave a message for us. We'll try to get it on the show tonight. But also, we'd love to see you at our Market Club Investor Summit in Salt Lake City on the 24th to the 27th. I'd like to meet you personally if you have a chance, to be there. And I think it'll be a lot of fun. So give us a call there at 1-877-219-1482, extension 10234. If you're calling internationally, use the 1-801-341-3981 number. Hey, it's Adam Hewison. I'll see you tonight at 5 o'clock right here on the Market Club channel. Thanks so much for stopping by. I'll see you later.